Welcome to Investors Insights. Our topic today is investment blind spots. What are those situations, those economic conditions that could blindside us as we continue to move through this market at year end, rolling into 2018? Really enjoyed the conversation that we had. Bobby, I'm going to start with you because you brought up some emails that we've received from clients. And I think that's very important as to what their concerns are right now. So talk about that.
Yeah, so we got a client email last week, and the question was, what are the current threats to the market besides politics? We all know that politics has always been a concern, but really, and I told her NAFTA. We haven't talked about NAFTA in a few weeks, and right now, NAFTA talks have gone nowhere. And so all sides are playing hardball, and that's important because NAFTA adds about $80 billion to the U.S. economy. It adds over 0.5% to GDP. And so the longer these talks drag out, that could potentially hurt the U.S. economy, especially manufacturing, which is a number that's really picked up the past 2 to 3 years. So we really need, there's a lot on the line for the U.S., Canada, and Mexico to really get their
right. But let's just talk about this. And I gave you the rebuttal in the meeting, but it brings up interesting points here because you can also be blindsided on the positive. So here's NAFTA, and we could have an impact there. And we've got to watch that on the negative side for our clients and portfolios. At the same time, we need to remember, and I'm just going to pull this data, is that if Congress cuts corporate tax rates to 20%, that would result in earnings of the S&P 500 companies some $10 per share higher to $151 instead of $141 in 2018. In essence, the tax cut will add a lot to the bottom line, and especially on financials. But so let's say manufacturing is impacted by NAFTA. If you're not paying as much in taxes, you have more cash to work with. Is everybody with me? So, and this market has been strong. We don't need to get overly optimistic, but it's been strong and has withstood a lot of negative news. Now you came back at me.
That's true. Yeah, because that's true. D.C. has definitely been focused on the positives of this tax cut, and I think corporate America has. And they have kind of forgotten to focus on the risks of NAFTA if that comes negative. But our other trading partners have not, because they're still focused on trade. For example, Canada's Prime Minister is traveling to China this week to discuss a free trade agreement with them. If Canada has a free trade agreement with China, the second largest economy in the world, it weakens our case against them, our largest trading partner. So while we're focused on tax cuts, which is fantastic for U.S. markets, the other countries in this NAFTA are working hard to fight us behind the scenes.
But I love the intensity of the debate that we had because actually then you responded back in terms of the international investor. Where is the international investor putting their money right now?
They're coming here in waves. $66.4 billion with a B in investment into the United States through the end of September. Highest level in 5 years. The previous 4 years were net outflow. So what we were talking about this morning, that's an underneath factor that could keep this rally sustained. Which would be good.
That's very true. It kind of points to maybe the international community. While Canada is focused on going to China, they're not so concerned. They're more optimistic, like Greg pointed out.
Yeah, and the other thing is that December 12th, 13th, we're going to be looking at possible interest rate hike. But my point is that if interest rates go up, that gives people another vehicle in terms of the retiree, in terms of the CD rates. There's other things we've got to watch. Bonds, I understand that. But there's a lot of variables here in trying to piece together the puzzle as to what next steps to take, how to navigate through the market. And the other point that we discussed, and we've had this as a theme now all year, is the innovation that's occurring in this country. Innovation in terms of business models, in terms of products. When you see a drug maker looking at a health insurance, how is that model changing? That's a topic going forward, and it's occurring in all industry sectors across the board. The other thing is we have constantly, and you gentlemen have reiterated this, that constantly said the stock market will lead first. Start looking around. Trey, last vlog you talked about boots on the ground. A lot of construction going on. Business from the standpoint is optimistic with this construction and this expanding economy that we're seeing right now. We don't want to be overly optimistic, but at the same time, these are changing times. In the words of Bob Dylan, the times are a-changing. So we definitely know that, and the dynamics are starting to come together. But the point we want to make to you is that we're looking at all these options because you can get blindsided by the positive and the negative. And both, we want to make sure that we're staying on top of it each and every day. No guarantees, but we've got strength in this market, and so we just want to stay on top of that. That said, continue to watch us on Twitter, Facebook, LinkedIn. We're going to keep you updated. We're excited about the year end of 2017, rolling into 2018. The one thing we do know, it won't be dull, and we want to keep you informed. Have a great week.